Hi guys, welcome to Savvy Money Show. Me, your host Sean. The video today, we're starting off with what I'm going to buy this week. Now, the first one is going to be a dividend stock, a value stock, which I'm looking at because it's we're having the tapering and we have inflation and interest rates rise. It's also an OTC stock, and it holds a huge position in Polestar, which is merging with GGPI, which is suddenly trading in. So let's get into it, shall we? It's Volvo. Now, gives a 7.4% dividend and market cap below the enterprise value, and has a PE of 12. Price to sales of 1.13, which is very good. Price to book of 3.19. Now, with this metric, I don't think they've accounted for the Polestar investment at all. And I think once it starts running, this, as it stands at the moment, this is a very good investment. But I think this will really change drastically. Anyway, let's move on. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. I realise you guys are very busy, and I appreciate you giving up your precious time to watch my video. Energy transfer. Now, PE ratio of 5, but these companies can't be done on PE. It's at 6.68%. It's a monthly dividend paying stock, and it's more on the cash it has on its books, free cash flow. Its market cap is almost a third of its enterprise value. The price to sales is under 1, and the price to book is under 1. It's one of the largest pipeline networks in America, and it's gone from spending $13 billion in upgrading its assets to only planning to spend $1 billion upgrading. It's not because it's cutting costs, it's because it's spent that much in the past and no longer needs to. It's been preparing some acquisitions where it will get great value in an exploration stock, and it will get in a producing oil company and exploration company, and it will get also the money that's on their balance sheet, which will kind of wipe out the investment needed, and we will see how it's doing quite well. And you see there, it's got $8 billion free cash flow. I personally, I like the company. I'm not such a big fan of the management team, but still, they seem to be doing okay. Teva Pharmaceuticals, they're a third of their enterprise value, their market cap. Now the trailing PE is 14, the forward PE is 3.5. You can't get better value than that. The price to sales is 0.65, price to book is 1.01. You've got to remember that both them and Johnson & Johnson was were the two that was contesting the opioid crisis deal. One of the biggest generic pharmaceutical companies, and a court ruled that they didn't mislead people and that they weren't responsible. Now, I think this is a good one to own. Remember, they was $30 There was $30 back in 2017, and there was all the rage then. I think they'll come back to that. Well, what can we say about Disney? No, they had some bad earnings, and they're deeply oversold. Now, their P is 261, which isn't good, but their forward P is 34, which shows the growth they're going to have. Now, you can't really go by these metrics because their biggest earners haven't even opened fully yet, which is going to be the cruises and the parks. The parks have just started to open, and the holiday seasons in the parks haven't been reported yet. They sold out for Halloween and of course Christmas. We haven't reported yet because we haven't had it, but their market cap is below the enterprise value, and in my opinion I think Disney Plus will be worth more than $200 on its own without the others. I wouldn't be surprised if we see them split up in different sectors at some point. If you've been following the channel, I've been banging the drum over certain SPACs. IONQ was one of them, DMYI, SEAH, GGPI, DCRC. Those have started running. This is another one I've been banging the drum about, DCRN. It's merging with Criterion chargers. ChargePoint used Criterion chargers. Actually, ChargePoint chargers are Criterion chargers. They just put a sticker on it and call them ChargePoint chargers, which means they don't have all the sales. If you go to the website and see all the partners they're working with, like InstaVolt and all the others, you'll just see how good they are. The last earnings was blowout earnings. Of course it was, because ChargePoint had good earnings and so did their other partners. People won't be sleeping on this for long. And with the infrastructure deal as well, this is an easy $30 stock, in my opinion. Now, this is down at a pre-DA valuation for me. I think once it merges, this is going to go, or in the week of a merger. I'm going to buy some leaps because I have a full position everywhere else on this. PaySafe. I trimmed some of my position before earnings to protect myself. I'm glad I did. I sold at $8, which was a profit for me at the time because I bought in at $6-7, my average cost, and it fell to $4.40, $4.50. I'll be picking up here. If you look through the earnings report, the reason they ended up failing was because of an impairment charge. I'm willing to overlook that. They're a new company. I will overlook that, them not coming out and focusing on the fact that the impairment charge was the reason why they didn't beat earnings. I still believe in them long term. Another one as well, Money Lion. If you look at it, Money Lion they beat and they still haven't, and they raised their guidance. They did everything right, and just people aren't interested. Anyway, PETV. I've seen some due diligence on this. They've got some exciting trials coming out, and I think this is one that's not going to hang about for long. I suggest look it up. On my Discord I've got some due diligence on it. It's completely free. I don't charge for anything in the Discord. Why not check it out? Links in the description. Mozy, semiconductor stock. My average is $4.50. It's still deeply oversold. It's getting volume. I believe this is going to do well. I believe this should be $10–15 stock easy. I'll be picking up more. Fubo TV. Now, the earnings weren't bad in my opinion. I didn't expect them to be any worse, and they were actually better than I expected, and I can see this as a takeover stock. The NYQ, I have comments in this. I want to take a bigger position. It's Planet they're merging with, and I see a big future for this. The MYS, Massey is the new Shamath. Everything he touches he turns golden. The units are the only ones that are available for the next couple of weeks, but at this price, why wouldn't you want it? Naked, I bet you're glad I'm not, but this company looks good to me. I've put due diligence in my Discord, and I'm very excited about it. I do think it will do well with some of its acquisitions it's done. I think people are kept away when they look at the financials, like the market cap versus enterprise value, price to sales, but don't be. Just look at the kind of companies they've acquired and do a bit more digging. Anyway, that's all for me. I'll see you in the next video, and a big shout out to all those who sent me a coffee. I really do appreciate it. Thank you for supporting the channel. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.